Hey guys, Saturday, January the 4th of 2025. I wanted to update the uranium spot price chart that I have. I recently posted a video on the sector and I wanted to take a glance and see what the spot is doing. It's very different from the futures. So without any further delay, let's get into it. So here in this chart, what I have here is the all-time high. For those that haven't seen this, my all-time low, our current low, and our current high. This is the Fukushima event that happened 2011, and these are timing points from different swing points. So we're 17 years until the all-time high. We are 23 years from the all-time low, according to the chart that I have, which is $7.10. And we're 7 years from the low of 2016 to the high. This was important. This helped me with the analysis saying that there's going to be a turning point on uranium spot. We're entering the 7th year cycle. And these are Gann cycles. And so far it worked marvelous. It just, I mean, you couldn't get it any better. It couldn't be any better. That's how accurate it was. So now we are from the high of 106.30 cents that we did somewhere around, you could say, January, month of January. And we're 335 days into this downward spiral. We're somewhere around 72.63. These are monthly closes. So like I said, uranium spot is a dinosaur. There's not much action. But as long as you could get the monthly closes, you could kind of pinpoint where this spot is heading. So now that I explained all that, this is Gann theory. I track everything, and I've had this chart for a while. And mind you, this is my website if you want to go swing by and check it out. There's not much. I just started it this year. So this is my, it's kind of like my notebook. I'll be writing things, ideas, putting stuff there and documenting it. So let's go here and take out all these because I want to clean up the chart. Let's take out all these dates so you can kind of see what's going on with uranium spot price. First thing I want to do is I want to add the pitchfork. So using the pitchfork, we notice and you see that I'm anchoring it from very important swing points. Look where we're at. Very interesting. We're somewhere around 72. I know the futures made a low of $70 and then kind of bounced. And on the futures, on the futures UX1, it had the pivot high of 2008 and the current 2016 low. So your midpoint was a little further above, and that's why it cracked it. But I have data going all the way to 2001, so your midpoint is going to be much lower. However, it is getting closer, possibly where it could possibly turn. We just got to see if this angle is gonna hold. As you can see, that it's not perfect. Sometimes it's not gonna work, but then it eventually gets up there. It could go right through it. I'm not saying this is guaranteed, but it's just something to monitor and keep it on your analysis. So far, I just wanted to show you where we're at there. So if we were to kiss that, this is January. It'll probably be around 69.70, and that's interesting because that's where the futures hit a low. We don't know what the close price for January is going to be. Once January closes, that's what we'll know. But futures already hit 70, and that's that APF, I call it, Andrew's pitchfork. That's the first thing that's kind of interesting in regards to geometry, because I do a little bit of everything. The Gann square. Let's see. Is this the one? This is probably not the one I normally use. Let's see. Maybe it's this one. As you can see, I haven't seen this chart in a while, or messed around with it. Okay, so this one is from the all-time high to our low of 2016, and this is your midpoint. So that midpoint reflects 77. So yeah, so this is the midpoint I was talking about on the futures market, which is a UX1, maybe UX2, and that's 77. And you see that we almost bounced off of it, and then we found resistance at this angle coming from the all-time high and fail. And this is on uranium spot, and then crack the midpoint. But now kind of finding support. You could say the it looks like a 1x1 right here, you know, anchoring from these two pivots, not on a scale chart, just anchoring from the two pivots. And we're finding some kind of support there. So that's interesting. Your midpoint in, I guess, in, or maybe the first square of the box, we're going to be hitting that this year in May. So that's an interesting timing point. There's a lot of things kind of cooking. I'm kind of getting a little interested now in the uranium sector because I'm noticing some things before I started recording that, you know, it's interesting. You know, that, you know, it makes me curious now, see what's cooking here. Next thing here is the Gann square from the all-time high to the all-time low that I have on my chart. Now we're entering into the midpoint, which is 71.64. And our low is 72.63. So now this is some good support. This is your main equilibrium of uranium spot price. Your midpoint. Midpoints are so important in chart analysis. I learned a lot of that from MSJ in regards to the midpoints. So, and Gann also mentioned that, but you know, MSJ elaborates on it more in his books. So you were entering our midpoint, and you got a timing mechanism here that you want to keep an eye on, and it's all happening this year. It's like a bunch of things lining up, or at least, you know, potential for seeing price action in the uranium sector. September of this year, anchoring it from these different key points, you're entering a new Gann grid or Gann square. So things could be interesting here. Think of it as the ending of a vector point. But however, we are at, you know, support. We're at the midpoint. So let's see. And someone mentioned on the YouTube video that uranium futures popped. So I don't know what was the cause of that, but it's interesting why things are now, if it's going to find support at 70 or in this area, it makes sense that things could possibly turn around here. Let's see, anything else here? I think that's it. It was very simple. Let's see. Yeah, so now we're going to go into some of the spectrum cycles. In this model, this is a model I have that I've been using, and I haven't touched it in a long time. So I just kind of left it there. Let's see if I could get this thing to zoom in a little bit. There we go. So I'm using three, you could say, cycles here. And this helped out with the analysis also on top of the in conjunction of the 7-year cycle, which I was leaning that it could possibly turn on the uranium spot. And so far it's worked out. And you can see that the green one bottomed out somewhere around October of last year. The blue one is now bottoming out. You could say January, February, you know, there's a monthly. So somewhere between the 2 months of this year, the blue one now is bottoming out. And then I have a red one that is going all the way to, like, you could say October. And, you know, you can see the two are going up, one starts going up. So what I did was I created a composite. A composite is a combination of all 3 cycles. And this is what that looks like. So we're entering, if it's going to follow the composite cycle, we're entering a phase that maybe uranium spot to start turning. So adding in the factor that we're in a, right at the midpoint, you got a turn here, and you get the Andrews pitchfork. This is kind of interesting, if you ask me. Just and as an observer, yeah, it's kind of interesting. Now we got to wait to see if we see spot moving higher, in conjunction with the uranium futures. If it starts turning and you put a trend line and it kind of breaks through, it might be a breakout. So it'll be interesting to see how that's going to play out. Another thing I have here is the Bradley model. The Bradley model worked out great. It gave us the turning point here, or possible turning point. We don't know. We just kind of just look into the future and just kind of see, okay, so maybe there could be a turning point here. Maybe it's going down, maybe explode. So far, exploded to the upside. The Bradley model picked also March as a possible turning point. We did make our high on January, or as you can see, as a close between January and February of last year, and then turn. And now we're entering, and it kind of reminds you of natural gas, where there's a couple. So we don't know if it's just going to be chop fest here, just kind of going sideways until maybe April, and then goes. This is not factoring seasonalities or anything. This is just a different model, just to look at this market. And so far, it's coming to March. So let's see how that's going to play out. So that's it for this clip. I am going to go now to another clip, or another model or chart that I have, which is more, I believe is geometry. And you know what? I could be wrong. I haven't seen this chart in a while, so we'll be both surprised once I do this clip video. So stand by. Okay, I just opened up this chart. I haven't seen it in a long time. It updated. So far, the price action is right, 72.63 for close of December. 106. Okay, I see. So 106 was the high. 106 and 30 cents. The close was somewhere around, you could say, 100. But the actual high was around 106. Let me see if I can refresh my mind here. Okay, so I feel like this is a little off. This might need to be fixed. There's the 1x2 here, and we went as high as 106.30. That's what I got marked here. Kind of coming back to me. Before I do that, let's see. So yeah, this is already, I think the last time I looked at this was in maybe May of last year, because I see that I have a counter from the low here, and maybe this was where we were at last time. Maybe I did a video, I'm not too sure. But the 7-year cycle kicked in, once we hit January, February. This is within the 7-year cycle. So yeah, that makes sense why I was leaning on that. So we went over, looked at that one. There we go. So yes, on my last video, I was talking about the 1x1, why we probably stalled. So there was another key element here of Gann theory that you always have to watch the 1x1. And the theory, well, the theory is that 1x1 is like the center line, and you are on this side, you're weaker, on this side, you're stronger. And most of the time, the majority of the time of my observations, doing this stuff for a while, is that every time we kiss the 1x1 for the first time, like Neo jumping the building, most of the times you fail. And this is a situation that had happened on the uranium spot. So if you're a Gannist and you're researching things, go through a bunch of charts and see every time the instrument, kisses it for the first time, see if it bounces off of it or goes right through it. If it goes right through it, then actually very strong market, because most of the time, and when I mean the first time, I mean it hasn't like kissed it in a while like this, see here, it bounced off of it, cracked, went through it. So this, was different, and, maybe it didn't work out. But when you're going from like all this here, and then you're going up here and kiss it, like a situation like that has been, a couple of years or a few years, You kiss it, most of the time it fails. Now maybe this time when it goes up, maybe it'll go through. Because eventually I believe we're probably going to test 136 in the future. But that's another video. But so far it makes sense why I have 106, because since this close, monthly close on the uranium spot, it doesn't reflect the volatility. And I remember when this thing was going nuts. Let's get that off. Let's see. Let's close that. Just see the ellipse. Yeah, we cracked it right here. Tucked right back in. Gann square. So this is a little more fractal. So yeah, that makes sense. We're at the center point. What's this? It's June. It's too far away. Here's another one. What's the difference between these two? Yeah, so that's from the all-time low, and this is from the 2016 low. And there you go. This is also another, 1/8 Gann box right here. Possible resistance. And then you put that in conjunction with the Gann, man, one by one. It was a double whammy. And then you add the timing. You got 7 years going from here to here. And it was just like a big cluster. It's like, hey, be careful. Things could get interesting. And it just all kind of lined up. Doesn't always, but in this case it did. Pitchfork. So the other video you just saw, I anchored from here. And now I am anchoring even further back. And I'm just, just testing some things here. So far we feel that. Let's see. Yep. So this one kind of worked a little better in regards to the angle. I mean, is it going to go all the way down here? I'm not saying that, but I just have it as I'm monitoring this uranium sector. Oh, the uranium spot. Swing points 50%, 71.68. We're right here. That's Fibonacci. Same thing here. We cracked the 50, which is 77.36. Advance and support, nothing there. Parallel lines, we're a little below, this parallel line, but failed here, or not failed, but on the close here. Now we're kind of in the center. This kind of came in somewhere around there. So yeah, so this is another technique for a possible turning point, and it all what I call the clusters effect. So if you've been following me a while, when you hear me say the clusters, there's clusters. Clusters is there's a lot of things all kind of just lining up in this area right here. And if you get a lot of things building up in regards to price and time, cycles, all kinds of stuff. If you see this just like a lot of things lining up here, there's a high probability that there could possibly be a turning point. Let's see. What's this horizon line? Oh, yeah, that was probably another close. Advance and support resistance. So, yeah, so we are at 72, 73, 22, and we're kind of here. The next one will be at 46. I don't know if it's going to get to 46, but I find this one interesting right here. So, with that being said, and just looking at the uranium spot, the uranium spot gives me more clues better than the uranium futures. What's positive about the uranium futures is that I get some real-time movements in regards to the future. So we just got this, this pop or this interest coming in, and I'm seeing that there's something in this area right here that makes sense. And the spectrum cycle, the model I'm using on this chart is indicating, possible turning point. There's one more that I got to look at, but I didn't have time to include it in this video, but I will once I update, some data. And I'm going to see how that spectrum model is looking compared to the one I have here. Wow, I got a lot of gunk in my throat. Anyway, I am going to sign out. Hopefully you like this video. I know there's a lot of people that didn't like my other video because, you know, the truth of the matter is the Bears are in control as of right now. And some people, you know, might disagree. But we'll see. I'm going to be looking at the uranium sector to see any, you know, changes. I'll just be looking at it. I'm not going to make a lot of videos on it, but here and there I'll pop up and I'll just do a big update. So if you're into the uranium sector or not, maybe it's a little time to start, you know, putting some of your favorite stocks that you like to see. Maybe there's a turning point coming this year to retest this high of 106. And if everything is true, that, you know, the tech companies and everything are going to need a lot of energy to, you know, power AI and all this stuff, you know, and they're going to lean on nuclear, then this could be your play to the upside. I'm going to sign out. Hopefully you like this video, and I'll keep you posted on my thoughts on uranium spot price.